Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter, January 13, 2024. The month is half over already. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does right now. And this week, well, the market, CPI numbers came in stronger than expected, and that's the cost to us consumers, and so that's not good. But the PPI numbers are the producer numbers or producer cost numbers came in better than expected, which means the price of producing those goods, which will eventually come to us, the consumer, have gone down, and that's very, very good. And the market did nothing for the first 2 weeks of the new year, but it's getting ready to make a really big move in one direction or the other. And our weekly stock analysis video, well, Ulta Beauty is still a great stock. However, like most retail outlets, the earnings are still increasing, but doing so at a slower rate, and the market does not care for slower growing earnings. The question is, do we keep this stock in our growth portfolio, or do we let it go by the wayside? In our ETF video, well, the tech, semiconductors, and QQQs are still in downtrends, but looks like they're turning around a bit. Now, the question is, will they lead the market higher as we come into earnings? Is the tide going out on some of these great stocks? That's the second question. So, folks, with the market getting ready to make a move, we're going to find out real soon. And here is the market. Here is the S&P 500. Now, what's happening? The red lines, number one, are volatility bands. And when they come together, the center line is the 20-day moving average. Now, when these red lines come together, or closer to the 20-day moving average, right in here, the market is getting ready to make a move in one direction or the other. So it's just not going to hang around in here. Let's go all the way back to here when last time these lines came together or started to come together, the market made a move and the move was downward. So we come back over here with the market at the top of this line. Is this market getting ready to make a move downward or upward and break through the lines to the upside, or come down to the bottom band here, which is just a really short move? Coming down here, the intermediate term indicator, slightly negative. And we have word that a lot of stocks have their 20-day moving averages crossing below their 50-day moving averages. And folks, that is a silver cross on the way up, but there are more negative silver crosses on the way down. So it's a bearish signal. It's getting to where the market seems that it might be at a top. And we're going to look at a few more things. But one thing I just saw, that Larry Williams, the great trader and great technician, is calling for a major top in Bitcoin. So when he makes a call like that, when somebody that you don't hear about so much anymore, but in the old days that name was all over the place, great technician, he is calling for a top in Bitcoin. Does that mean that the market is also making a top in here? Well, boy, oh boy, we're going to see real soon. But let's go to the next chart. Now, I'm not going to tell you what this is. I'm not going to tell you what this is. So let's look at this. And right down in here, we see the possibility of a double bottom right in here. So now we're asking you the question out there, folks. Now up here, the intermediate term indicator, if this turns up a little bit and we get a move up in this indicator up here, this is a very, very short-term indicator, by the way, folks, we see a bullish divergence if the market turns up in here. I'm saying, okay, let me back up. I'm not saying the market. I'm saying if this indicator turns up, then we will see a buying situation. I'm not going to tell you what this is yet, so beware. This is a test. All right, so if this turns up, we will get a buy signal. If this turns up, then the bottom or the double bottom has formed. And down here, this indicator is still pointing up. So what do we have? Well, of course, the green line is that 20-day moving average, blue line 50-day moving average. So we want to see this, well, I'm not sure if we want to see this. This indicator or this particular equity is maybe getting ready to make this turn in here and move up and try to break through this 20-day moving average. Now, what I'm showing you here is the building up of a possible bullish scenario. The problem is, and here it is, so hold on to your hats. The problem is this is an inverse ETF. So it's short the market. So in other words, if this turns up, that means the short position is where you want to be. This is a position of the short QQQs, the short index or the short NASDAQ 100 index. So if the short is going up, so if this turns around and the short goes up, that means the market is going to come down. And let's go back here. That means that this will be holding true because this market is getting ready to make a move in one direction or the other. And Larry Williams is saying that the Bitcoin has made a major top, and if that goes down, maybe the market will go down too. Back to this. If we get a buy signal in here, and we're very, very close to doing that, this is a short QQQ. This is a short situation. It's an inverse ETF, and folks, if this goes up, and it looks like it might, all we need is 1 or 2 days of an upward movement, which means a downward movement in the market. This will turn up, which means the market turns down. So I fooled you here a little bit because this is the inverse. Now, if you go to TD Ameritrade and you're looking at, say, the QQQs or the SPX, which is the S&P 500, and you go into the top box and you put a negative in front of it, then you get the inverse of that chart. And I'll tell you what, that inverse of the chart, which this is, it's an inverse of the S&P 500 and the QQQs. This is the inverse. Sometimes that inverse gives a better indication than if we are at a top. So when we see something like this, that means this might be turning up, which means the market will be turning down if this turns up. And don't forget, this intermediate term indicator down here is still pointing up, which means this thing just might turn around and go up. We are oversold on this particular indicator. This was a test, folks, and you don't see this very often. In fact, I've only seen it in one place before, and I've used it quite a bit, and it's a pretty nice indicator. All right, let's go to the SPX, and this is a real chart, okay? And what do we see here? We see a possible declining. So this is the market now. The possible declining if this market goes down a little bit. And we have this possible double top up here. And we can see that the market tried to get through the 4,800 level up here, which it tried to do back here. And folks, it hasn't done it. So we are flirting with all new highs, but will the market break up to even newer highs? And don't forget, we're coming into earnings season. And the banks didn't do so well on Friday. So as the banks go, so does the market. And we were a little bit disappointed in what the banks gave us. We're still above the 20-day exponential moving average here, and it held in here. So that was a very, very good sign. However, we're at a double top. This indicator, intermediate term indicator, is still pointing down, but it looks like it wants to turn up, but it hasn't. So we'll just have to wait and see. This is going to be an exciting week, folks. And let's look at the Dow. And folks, when we look at the Dow, we say, okay, where is it? Is it doing anything? And you can see it hasn't done anything for the past 2 weeks in here. The short-term indicator is totally neutral, has no clue where the market wants to go. And down here, we have the black line crossing over just ever so slightly the red line, and that is is a bearish signal, but just slightly bearish. But still, I'd rather see it pointing up than starting to roll over and point down. So, folks, this week coming up, it's hang on to your hats. And don't forget, it's a short week because Monday's a holiday. So our technical signals, well, we have to give the down the benefit of the doubt right now, but some of these intermediate term indicators here are starting to turn or starting to give an indication that they're turning up a little bit. So maybe we have some hope in here. We still have our hedges on. Those of you who want to hedge on those ETFs, especially our triple ETF, which is doing very, very well. It's fantastic last year. So, and I'm talking about 2023. Last year was just 2 weeks ago. So we just have to keep an eye on these because these are kind of in nowhere land. These indicators, the short-term indicators, are in the middle of nowhere land. So we'll see which direction they'll go in. This week will tell us something, folks. And for portfolio protection, this is for about $135,000 portfolio. This is about 12% below the market. We will be rolling over the January calls. The January puts sometime this week, very early in the week, while we still have good prices, because these puts are very, very cheap right now. So we might as well roll over the January into April. So then we can have 3 puts for $135,000 portfolio. And these are the SPYs, and the SPYs are 1/10 the SPX. So we'll roll over into April at a very, very cheap price, and then we can sit back and let the market do what it wants to do. So, folks, we had a do-nothing week. We had a do-nothing week the first week in January, the second week in January, and there's an indicator out there that says the first 5 days of January, how they go, then goes the rest of the year, and it's not positive. But this year, the Federal Reserve will probably lower interest rates, and it's an election year. So we have a couple of things going for us here, but the waves in this picture look a little choppy in here, and that's what we're seeing this coming week as the earnings start to come out. And usually when the earnings start to come out, the market does fairly decent. So we have good and we have bad, both pulling in opposite directions, and we're just going to have to see. So go out, forget about the market for 3 days, folks. It's a 3-day weekend. Go out, have a good time, celebrate whatever you're celebrating. Be with your family, be with your loved ones, have a Sunday dinner. And folks, guess what? We'll be right back here next week, and we're going to see a poppin' week, that's for sure.